All right, let's talk about one of the most powerful and frankly coolest concepts in trading, fair value gaps. Today we're going to crack the code on these things. We'll figure out how to spot them, why they even show up on our charts, and most importantly, how to trade them like a pro. Ready? Let's dive in.
You've probably seen this, right? These big, empty spaces on a chart that just feel unfinished. Well, they're not random glitches. Think of them as footprints left behind by the market's biggest players. We're talking giant banks and hedge funds. If you can learn to spot these footprints, you're not just looking at a chart anymore. You're actually reading a story about where the smart money is planning to take the market. And by the end of this, you'll know exactly how to read that story.
So here's our game plan. First, we'll cover what these gaps actually are, the market's glitch. Then we'll get into decoding the footprints so you can spot them yourself. After that, we'll open up the Smart Money Playbook to see why they form. We'll also cover how to avoid the common traps they set. And then, the best part, we'll build you a concrete trading plan and even look at how to handle these things during crazy news events.
Okay, let's get right down to it. What in the world is this market glitch we call a fair value gap, or FVG for short?
Think of it like this. The market just moved so fast and so aggressively in one direction that it literally skipped over some price levels. It left behind what you could call unfinished business. This creates a serious imbalance, and you know the market absolutely hates imbalances. It feels this gravitational pull to go back and fill in that missing puzzle piece. And that's our opportunity. That's what we trade.
Now, these gaps basically come in two flavors, bullish and bearish. A bullish FVG happens during a huge, fast move up. It screams intense buying pressure, and that area often becomes a future support level. On the flip side, a bearish FVG forms in a sharp drop, showing massive selling pressure, and it usually acts as a future resistance level. Knowing which one you're looking at is, well, pretty crucial for knowing which way to trade.
Okay, so we know what they are, but how do we actually find these footprints on a live chart? It's actually more precise than you might think.
It all boils down to this super simple 3-candle pattern you see right here. Candle number 1 is your setup candle. It gets the move started. Number 2 is the star of the show, the momentum candle. This is the big, powerful candle that actually creates the gap. And finally, number 3, the confirmation candle, proves the gap is real by not immediately filling it back in. When you see these 3 lined up, boom, you found the signature of a fair value gap.
But hold on, not all gaps are created equal. You have to validate them. Look for a clean structure. Is the gap a decent size? A tiny little sliver might not have much juice. But here's the most important question. Does it align with the bigger picture? A bullish FVG popping up right on a major support level? That's an A+ setup. One that appears in the middle of nowhere? Not so much. We're hunting for these high
For a complete and more episode about the marketing, click the links.